When Warren Buffett unloaded his entire stake in U.S. airline stocks earlier this year, investors took notice.
The world has changed for the airlines.
Buffett, who had been notoriously bearish on airline stocks, jumped back into the industry in 2016 when he took nearly an $8 billion position in United, American, Southwest, and Delta.
This move into airlines is a pretty shocking reversal for Buffett.
Buffett wagered people would fly more in the coming years, and airline stocks would retain their value. Cowen analyst Helane Becker says, in fact, the industry was on track to have one of their best years ever.
We probably entered 2020 in the best financial position the industry has ever been in.
But then the coronavirus pandemic hit.
Many airports across the country, ghost towns, planes littered with empty seats.
Business travel has almost evaporated.
We normally fly 2 to 2.5 million people a day. So you saw this 96% decline. That's not sustainable, obviously, for any business. This downturn is so unprecedented. This is worse than 9/11 and the Great Recession combined.
Airline stocks are just getting hammered, down anywhere between 9 and 14%.
Investors Business Daily senior reporter Gillian Rich says airlines have employed several tactics to adjust to the drop in demand.
They've done two things. They reduced prices to try to incentivize more travelers. They've also offered their employees early retirement or severance packages.
Rich says the severance packages have been popular, but not enough to stave off the threat of future layoffs. All the major carriers, including American, United, Delta, and Southwest, said they plan to shed workers in the coming weeks, and prolonged coronavirus shutdowns could threaten the jobs of nearly 150,000 airline workers.
Analysts have a gloomy forecast for traffic predictions, and the International Air Transport Association doesn't see global passenger traffic hitting pre-COVID levels until 2024. That's a full year later than their estimate at the start of the pandemic.
Becker says the airlines did everything they could up front to conserve and raise capital, but that investors need to watch how they manage their debt burden moving forward.
Each of the airlines had spent so many years working on improving their balance sheets from the Great Recession, and now they're just right in the same spot. How do I manage a $50 billion balance sheet designed for a $40 billion revenue company with only $15 billion of revenue? And even if it doubles between now and 2022, it's still 15 going to 30. I'm still underwater. So that's why it's going to be a long road to recovery.
She says the initial CARES Act passed in March, which allocated $25 billion to airline carriers, helped greatly with liquidity issues. But that funding runs out on October 1st, and a delay in a second relief package is causing widespread uncertainty across the industry.
I think it's very important that we keep the airlines going. There'll be very good times very soon, I hope.
But Becker says the rebound in airline stocks ultimately comes down to restoring demand.
Revenues are improving, but not fast enough, and everybody needs more traffic at reasonably good prices in order to get to break even by year end.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.